So welcome back to another episode of Multifamily AP 360, and today's our guest is Matthew Sutika from Nimble Insurance. Welcome back, Matt. This is our third time.
Yes, third time's the charm. So everything we missed or we didn't get right the first two times, we'll screw up for a third time.
Yeah, absolutely. And a little bit about Matt. Matthew Sutika is an award-winning entrepreneur and business owner in the multifamily insurance sector. As an investor himself, Matthew founded Nimble to offer a unique approach to commercial coverage. With years of industry experience, Nimble provides support for every stage of real estate journey. So with that, Matt, you want to add anything?
No, that's spot on. We are a brokerage, and my background is insurance, and most specifically insurance for multifamily, real estate, or habitational, whatever word you choose, properties. We're very niche in that, and that's our expertise.
Yeah, so before jumping into other points, why you're specifically, focusing on multifamily, and you have
Oh,
little bit, focusing on multifamily, right? At least.
yeah. So for me, the biggest reason I flipped into, I've been in insurance forever, State Farm. I've built smaller brokerages. I started like 13 years old, my dad's State Farm. And, when my dad was an agent growing up, he hung his shingle at State Farm. People came to him, they trusted him. There was good conversation. And then Gecko and Flow, they came into play and they just kind of really disturbed that industry. Now people shop to save a dollar. There's really not a lot of value a lot of times that, brokers can go, or you're really fighting that. And so just over time, I started to find myself journey towards this apartment space or habitational space because there's still a need for a broker. We're a great partner. These deals are not easy to get across the finish line. So there's still like a value that we can provide to clients. There's a need, to help on new purchases, refis, renewals, et cetera. And then ultimately I started to invest myself into the real estate space. I'm in 4,000 doors now as a GP or LP. And so it just became full circle for me that I could use my passionate day job of insurance to work with people I liked anyways, because I was investing in them and believed in them. And then the more insurance I wrote, the more I had money I had to invest back in deals. And then it just became what we do full time.
Thank you for sharing that. So you founded Nimble Insurance and to offer unique approach to, commercial investors, right? Share us like what is your unique approach?
Yeah. So, for us, our unique approach at the very basic is I call it we're responsive, right? And we beat out 99 of 100 agents being responsive. And then the other things that we do is I'm what's called a capacity junkie, meaning for the space, any state or any type size, you always need to find more capacity, they call it, right? Meaning more carriers in the mix. And so we really specialize on trying to find unique programs, unique carriers, new carriers, really learn the carriers because that's what really can separate us from another brokerage, right? Anybody that's writing apartments, I hope, knows how to, correctly write a property, a GL, and an umbrella policy if they're in the space and doing it. But what it really comes down to is how many opportunities do you have for your client? How many unique opportunities? What's the new trend? Maybe, and I mean by trend, I mean what's the new carrier that's writing in Houston or writing in Florida now and staying above that. So that's really our specialty and what I spend a lot of my time on. I call it a capacity junkie, is I'm constantly hitting the markets trying to find out any opportunity for my client. And a lot of times it's, on what the seller has, maybe I'm finding that out like, oh, that's a new carrier, bringing them in, or maybe even sometimes if we ever got beat out on a deal, right? It's like, hey, look, that's fine, but who was it? Because I need to get them because I have 1,000 more clients that could benefit from that great rate if that carrier's doing that, here in, Iowa, wherever the state was. So that's really our secret sauce is that we respond. We know what we're doing clearly, as I mentioned, with the background of the HAB space. Like I can talk the same hat as a GPLP would. So I understand that. So we're not going to nerd you out with insurance terms. We're going to talk per door and proceed cuts and things like that everyone probably watching this talks about. And then the last piece is that we are always bringing in new capacity or finding new capacity or new ways to help our client. And that's really our key difference.
Thank you for that. So last couple of years, insurance playing major role like in acquisition side or managing operation side, mainly like Florida markets or Texas markets, even North Carolina house insurance almost, 2x, So what's your take on that? What is current, insurance, how insurance is impacting current, commercial real estate space?
Yeah, it's been really tough, just being straight with it is that not only has insurance taken the increase over the last, couple years, it's right at the same time that a lot of the interest only loans and different things like that, we're having those problems. So it's like a double mix. People are trying to refi out of their loans, which they need cheaper expenses, and that's going up. And it's just been two bear markets colliding, right? Or just two bad situations colliding. But we are seeing insurance. I'm not saying it's like dropping off a cliff price wise, but we are seeing it stabilize a little bit, get better in certain areas. More carriers, as I mentioned before, it's all about capacity. So a lot of those carriers that maybe pulled out that caused that wave to happen are coming back in. Maybe they're being a little bit more aggressive. Maybe their cutoff is no longer 2000. Now they'll write till 1980 year built properties. So you're seeing a lot of that. But really, my advice really, because the key is, not what's already happened. If you already own a property, we'll have a conversation. We're going to do our best and find the best rate for you. But where a lot of people, I think, need to concentrate on more is two things: insurance and taxes. I have absolutely no tax advice, right? You can get that somewhere else, but those are two of the biggest items, right? And most people, this is how they come across their insurance or when they're doing a deal. They go find a deal that they like, right? They run all of their analyzer tools and their different Excel sheets, and they're just like in love with it, right? And they use the OM number or some number that they got from one of the data pieces from the seller. And they're like, if it's that exact number, I can buy this property. Then they come to the insurance person at that time, like, hey, can you look over these numbers? And then what happens is, was to say that insurance person most likely is higher, right, than that number. They either like don't listen and they still go with the number because it works for their analyzer, and then they're upside down already, or they're then at that point they're like they're disappointed because they love the deal and it just doesn't work from insurance. So that if they have to step away, they're upset, right? So you're two bad scenarios where we have a whole department that will estimate, and we say, come to us and let us tell you where insurance is reasonable, right? And then go find your commercial broker or your mom and pops or whatever and find your deals. Because if you start with the insurance, like, hey, if I tell you right now, hey, Austin has great rates, or Dallas is getting better, or you can do Jacksonville or Sarasota, Florida, and they're reasonable, here's the rates. Well, now you already have a head start. So now when you go look for those deals, but if you come to us after the LOI or you're already under contract, right? It's a lot, like you can't change much right at that point. And, that's where really I see people get themselves in trouble. And then it's really, once they start that way, it just seems like a continuous pattern throughout the 2, 3, 7 years, whatever, that they own the property. So if it was me, and again, I'm not in the other, the audience side of the shoes all the time, but I would maybe lead with the insurance, lead with taxes, and go find where the oil is, right? There's so many opportunities probably out there. Go find the pockets where you already know you can get a competitive insurance rate, and not trying to force it the other way once you find a deal you really love and trying to pencil it or make it work, or you're yelling at my guy because he said it's 900 a door and you really need it at 700. And, so that's really my advice for the space, what's going on, and then also like how to prevent it maybe for the future. So you're not worried about the bear markets, you're not worried about these different factors going, because you found a property that is in a good insurance space to begin with, and then you set your property up for success that way.
Yeah, thank you. So always like get quotes like real estate, I mean taxes or insurance get quote before submitting LOI. Normally brokers will share like best case scenario and worst case scenario, right? So always on the right with
Mm,
maximum insurance quote, and also if it makes sense, if it works, then only proceed further, right? So thank you for
yep.
that. So, like, what kind of trends you are seeing, like, especially insurance space from, small portfolio, small operators to like large portfolio operators, different asset classes like Class A, Class B, Class C, and across different markets. What kind of trends you're observing?
I'm seeing people go newer, right? The trend a few years back was a lot of value add. I was seeing people buy in the 70s and 80s, and they were value add. The loans were good, interest rate, and they were hitting, pro forma in 18 months, right? And so that's clearly not happening. And expenses on a lot of those properties have skyrocketed, et cetera, insurance being one of them. So I am seeing the trend of 1990, 2000 and newer. I'm starting to see people looking at, they're analyzing things differently instead of like a value add. They're kind of, and again, I'm no expert on that side, but they're looking at like, hey, okay, yeah, I don't get the value added bump of a 1970s property anymore, but I get this, 2000 or just 2010, and maybe I have less maintenance or I have cheaper insurance. So I think people are kind of just looking at different factors that, whether they got burnt on a different deal or they're just seeing, a friend or a colleague or someone else in the space. They're hearing that horror story of the 1968 property in Memphis that, can't get insurance, or the Jacksonville deal that's 3,000 a door. So definitely trend towards newer. I am seeing a trend to a point. It seems a little bit smaller. Some of my clients that were buying a 300, or I'm getting a lot of like 100, 200s coming. I don't know if that's a trend or just, kind of what we're seeing. If, they're looking at, I don't know if that's a diversity from risk standpoint that, that maybe something smaller unit count is a little less risky. Again, that's not where my expertise lies. And then I'm starting to see people that historically were Florida based now looking at Texas, looking at Georgia, looking at some other states, again, which is my suggestion is like, hey, if you can't make it work or you're struggling in a state, like maybe start looking to a new opportunity. There's so many opportunities that we see across the board. Again, I don't know the numbers from the backside, but I'm seeing people buy in Arizona. I'm seeing people buy in Iowa. I'm seeing people buy in Tennessee, Nashville, different areas. And I'm seeing some really nice per door insurance rates, 300s, 400s, 500s per door. Again, I don't know if that means that there's less revenue and some of the other things, for these properties. But speaking from the insurance side, I'm seeing people kind of go outside of maybe their comfort zone or outside of where they, historically had purchased.
So what are some strategies, like some way you're helping your clients from like small portfolio like operators versus like large portfolio operators?
Yeah, I mean, our biggest skill that I think we help people with is understanding the insurance and allowing it to relate to what they're doing. This kind of came by accident. Just we had such a demand for ranges, as you talked about on the estimates. And so we started doing that. And I'm not one that would allow my team to just throw out a 600 and 800, dollar estimates low and high. So I told my guy, Nick, that does a lot of these, I said, hey, like you got to give context, right? Because I don't want to. We did it selfishly because we didn't want the phone call back to us like, "Hey, you told me 600," and then we're trying to explain it. So I said, if you're going to give an estimate, you need to put bullet points underneath of what you used or what your thought process was for that. So either the client can correct you and say, no, this is actually copper wire and it's not aluminum. You shouldn't have, did that. That's fine. Then we can update it. But what it turned into is a tool during due diligence and what I call horse trading renegotiation that was pretty key. And I'll give you an example is that if we said 600 low end, 800, and on the 600, we state that that's claims free, copper wiring, red painted fence all over and brick, right? And then on the next one, we're saying, hey, that's one loss, it's aluminum wiring or mitigated aluminum, and it's X, Y, and Z. Well, now you have an OM that says 600, right? And it says copper, no claims. So now you go submit your LOI, you go under contract at 600. Why would you not, right? Under that same scenario. Well, now you're doing due diligence and you find out it's aluminum wiring. You get the loss runs finally from the seller and there's 2 fire losses. And now you come back to me and what were you going to tell you? We're going to tell you, hey, it's 800 a door, right? It's that higher one. So now you're 200 a door bad off the bat. But since you have tools, you can now go to that seller, a seller broker, however that negotiation works, and say, hey, look, based off your OM, look, you can see exactly what my insurance guide provided. It matches. That's where I went under contract. You weren't upfront and honest about the wiring and the loss history. And so now I'm 200 plus per door. We need to renegotiate here a little bit. Like I'm still interested in the property, but like it's got to come out of your end, not mine. Like, because maybe I wouldn't have submitted so aggressively if it was 800 a door, etc. And you have the tools where if I just told you 600 and 800, you have nothing to go. And you also have nothing to help fact check for us during due diligence. So to me, that I spent a lot of time, giving that example, because I think it's one of the most important things that we can do is not just give numbers, which all insurance brokers want to just, oh yeah, that's 800 a door. That's, historical. It's use insurance as a tool to help you on your property and not just a line item. And that's what we're really striving to do. And, teaching our clients how to use insurance, how to use the thing. Because at the end of the day, all that analyzer tool is about finding the correct purchase price for the property so that it runs efficiently based off the numbers. So, if we give you tools to be able to use insurance to do that, you're going to be the most accurate person out there. And so that's what we really strive. Are we, perfect every time? No, but that's what we're really working on is making that better and better each time.
So when you're going with like portfolio or umbrella kind of, policies, so like what kind of critical insurance considerations like investors should consider to avoid any kind of risks or, anything?
Yeah, absolutely. So, you have some huge protection out there called your lender. So if unless you're a cash buyer, which I can talk about shortly, but if you have a lender, the greatest and the worst thing a lender provides is what's called an insurance consultant for them. And they work with us to make sure that your properties have the correct coverage, right? Not that we would, do them incorrectly anyways, but it's kind of a checks and balances system, which is really nice, which affords you as the operator, GP, whatever you want to call yourself, in that position, that's like you have two people looking out for your interests. The lender's looking out for the interest of the loan as it relates to insurance, which will protect you, right? And then you have your broker looking out for the overall property, the rebuild, what you might get a lawsuit for, et cetera. And those two parties kind of come together, and it really does bring that more accuracy to having the correct coverages. You as the GP or the operator, I think you want to spend more time picking your horse or your broker that you really trust than you're ever going to like learn a million things in the insurance space enough to be able to dissect, a property policy and make sure that every exclusion is there. Now, over time, do I have clients that have been in 10, 20 years? Do they know a little bit more than the next? Absolutely. But I think that's the two important things: have a really good broker, right? Have a general understanding that you're going to have property coverage, which is going to cover things like, fire, theft, wind, hail, tornadoes, things go on, and rebuild your property, pay your rental income. You're going to have some liability coverage, which is going to protect you if someone falls and gets hurt at your property, or, the things that a lot of times the slip and falls, fall up a stairs, something falls down on somebody, going to cover you. So from a lawsuit standpoint, and then you're going to usually need a little bit more coverage there. So a lot of times we're putting in what's called an umbrella or excess liability on top of your normal general liability. So that's going to be the main coverage you're going to look for. And then you're really going to trust your experts along with the insurance consultant at the lending institution to really make sure you're there. And then, if you're doing bigger properties, you're also going to probably have property manager in that mix too, with their own requirements for the insurance and making sure that everything's correct and lined up. So you really do have a lot of eyes on your insurance policy. Now, if you're a cash buyer, then, you're going to want to have a little bit more conversation with your insurance broker, or you have maybe a small agency loan or some different things like that. You might want to be a little bit more involved, but anything big, an Arbor, a Bancorp, larger loans, Fannie Freddie, you have a lot of eyes to help you guide there. And then I think the last thing is really just having a conversation pre or post bind with your broker to just talk to them about some scenarios that you're aware of and ask them for some scenarios that you're not aware of. What might happen? You asked me for trends in the area. That's the question I would ask the broker. Like, what trends are you seeing? Like, what claims are getting submitted by your desk? And am I covered for those? And I think those are good conversations to have with your broker. They're fun for us insurance nerds, maybe not the most fun for the operator, but it is good. And it just will give you a better security that you are covered and you're taking care of your investors' property.
Sure, sure. Would you share or would you throw some insights on claims in last 2 years in your portfolio across or across like insurance space?
Yeah, the biggest on the property side, we're seeing a lot of increased fires. Not really sure why. Frankly, I don't know what is causing that. I don't know if it's the type of tenant. I don't know if it's what the chicken or the egg is, but we are seeing a lot more fire related claims, especially in like the properties around the bigger cities. Just, it seems like I got a new fire claim every day in Atlanta, or Memphis, like these more. So I don't know if, probably there's a statistician out there that would tell you like how things went, like, oh, it's because crime rate's up, and because crime rate's up, this is happening, and that happens where people will create more fires, or, I don't know the actual thing causing it, but I am seeing a lot more fire. Your hurricane, wind, hail, those are, what most people call, Mother Nature or God related events. So those ones are, they're always there. They're always happening. Just, they saw the stuff probably if you've been watching the news, there's, been the tornadoes and the floods and different things like that have been happening. That's going to continuously happen. And then from the GL side, I'm seeing a lot more what I call fictitious or ambulance chasing type of losses. So if it was me from an insurance standpoint, one, I would have some type of general counsel. And I am, I guess I got a disclaimer here, like not legal advice, but I'm getting so many of these notices, right? And you want to just make sure you have a good attorney that can, a lot of times our first advice is like, hey, maybe just have your attorney shoot a note to see if there's even like pushback or, next steps. But I definitely would have a good solid attorney. Of course, if there's a real claim, you're going to turn it in and the carrier's going to provide counsel and, take that through. But a lot of these ones are these just little headache GL claims where someone falls and they send you a letter for 20K and it ends up settling for 5. And, you want to put your insurance company on notice, but really a lot of those are settled between lawyers, unfortunately, right? And they're just kind of those type of battles. But we are seeing those more and more as I'm seeing more and more billboards for call me for claim, going up as we become more of a litigious society. So definitely making sure you're protected from a GL and umbrella standpoint is very key.
Yeah, good. Thank you. So like, if you see this kind of more number of clients, it will obviously impact, insurance prices, right? So how exactly that will be calculated, like, from property level or, that market level or the state level or, different markets,
Yeah, from a rate standpoint, it really is all of those driven, right? State by state, and then within the state, it's characteristics. The easiest way I've been describing it lately is a lot of people will remember, I don't know if it's still around, but at least if you're probably over like 25 or 30 years old, you remember the Guess Who game, right? Where it's like, do they have glasses? And that's very similar to the markets per state, is that you're going to start out each state with that like Guess Who board. And then depending on if what city, what year built, what frame or brick, different things like that. It's almost like, does it have glasses? Do they have blonde hair? Do they have red hair? Do they have a hat? And so that's kind of how it works, right? And so as far as how you tailor it down to each state and showing how kind of unique snowflake these are. Now, there's definitely trends, right? The catastrophe driven areas are still struggling the most with that rates, and the rest of the country is kind of taking a break and getting a little bit better. But pound for pound, every state has its own unique. And then you have a state like Texas is the size of the United States, right? That it's almost got 4 or 5 different completely different insurance situations going on. So, but those are good conversations to have with your broker on an individual, depending on where you're buying. But overall, what I will say for the just general audience, that I think insurance is trending in a better direction than a worse. I don't think we're going back to 2019, 2020 prices where everything was 300 a door and easy, but I'm hopefully that we're not bearing, hurricanes and crazy events going like straight, up and to the right like we were for a while there, where it was getting pretty bad.
So how do you handle like, any complaints or different conversations with clients, especially like from coverage point of view or premiums point of view or, any claims point of view?
A lot of the price and coverage, again, there's some dictated by the lender, but what we do from a price standpoint is, everyone says that they shop your properties and really look at carriers. Like we really do. My carriers probably hate hearing me say that because they want to just write something and then stay on it. But so that's how we handle, price and coverage, is that on the coverage side, we know a lot of the lender requirements inside and out. We know where we can push back. We know where we can get waivers. We know where we can, really try to get some things to reduce there. And then from there, we really do push all of our markets. At the end of the day, there's only so many markets for each individual, Guess Who board, right? But that's really where you can do. So we try to work down on the lender side, and then we try to work a little bit with the carriers as far as capacity. And those are the best to, do that. And really the lender piece is actually one of the biggest, because these lenders, when they just throw out the requirements, someone wrote them at Arbor, I'll use them as an example, back in 1975. And it's easier for them to just throw out the boilerplate. And I think a lot of brokers just take it as is. Like they read through them and they're like, oh, it says no more than a 25K deductible. It's, this, and this. And they go do it, right? Where we immediately attack it. I have a guy in the office that's pretty much all he does. And it's really, really key because they just haven't rewrote a lot of these things. They'll say, hey, no more than a 25K wind hail deductible in Houston. And that hasn't been a 25K wind hail deductible in Houston in 10 years, right? So it's immediately you're getting a waiver for that, right? So that's the key. And then The claims decision that you asked, I think you flip a claims decision into a business decision, in my opinion, right? You have a deductible, your portion of the claim that you're going to pay out if there's a covered loss, right? So if you have 1,000 or 10,000 or $25,000, that's your responsibility of the total check that's going to be needed. And to me, the biggest question someone will say, if I turn this claim in, what's my renewal going to look like, right? It's like my least favorite question, right? Because there is no answer in magic ball. But what I can always tell people is, all right, let's get an estimate for what the claim looks like, right? And if you have a 25K deductible, you'll hear what I'm saying from a business decision. All right, they come back at 50K for the total loss. So it's like, all right, you're already paying 25. Can your property afford the other 25 and no claim? On it. Let's just say you have a $200,000 premium right now, just for example, right? And if they're like, yeah, we can, I say, well, I know that probably if you turn in that claim, you're probably expecting at minimum 10 or 20% increase, right? So that math right there is $20,000 to $40,000. So your net of turning that in isn't really that great, maybe from a business decision, right? Now, if you have a $250,000 loss, I would say the opposite. I say, I promise you, I'm not going probably from 200 to 450,000 on your insurance. So I think even though you will take an increase, your overall property spend is better for you to, turn in this claim and let me deal with the renewal and the shopping and that claim, there. And then again, the only caveat out of that is this property in Corpus Christi where there's a couple carriers, or is this in, Ohio where there's 40? So that plays a little bit, but we turn claims into business decisions because that's really what they are, right? They are a business decision of, can you afford the deductible? Can you afford to pay for it yourself? And what does that impact potentially of my insurance now and in the future? It's numbers. And then you as an operator can see those numbers, and you're used to making numbers decisions all day. Just no different than whether you renovate something or not. Are you going to get that value? Are you going to increase rents? Again, insurance as a tool is a lot easier for an operator to talk through than an operator to make an insurance decision, which is, a little scarier, a little bit more challenging.
Thank you for sharing that. So how insurance premiums are different from agency debt versus bridge debt?
So really the insurance isn't as much different as the price is different, so when I alluded to that earlier, maybe there is a few less requirements, a little bit, but it's really when you're going from, one to the other, it's been just the fact that the insurance has increased. And most people, when they have started that refi process, they start with what they're currently paying, and they're not thinking about, oh, but I renew in a month and that's going to interfere right in the middle of my refi, or, so those are the factors that really you want to think about. Is I'm not saying like wait for a refi, don't do it anywhere near a renewal date, but like I'm begging my clients, please don't do that, because it's like the most challenging part is like, oh, like they have the refi, especially for the guys that get me like refi closing date and renewal date within like the same week. So, but just be conscious of it and then have that conversation. So I'm not really seeing, maybe there's some things that you could lower on the ordinance law. Maybe they're a little bit less on what umbrella amount you need. Maybe they're a little bit more forgiving on your building and rental income amounts or the deductibles, but it's not going to be crazy. It's more just understanding the process that you're going to go through, that if you're going to go through a refi, you probably don't want numbers to go up. So if you're thinking about a refi and the number makes sense on your insurance, and it's, where are we in May, and you have a October renewal, like get that refi done now, right? Like, don't wait until September and then you're going to run where you're going to start the refi. You're going to do all your proceeds based off of current number. And then all of a sudden I'm going to give you a 10% increase. And you're calling me like, Matt, this is killing my refi. Like I'm going to lose proceeds. I'm going to lose $1 million. So just having that general understanding, again, I've said it probably 15 times now, but insurance is a tool. So just understand those things. And if you talk to your broker before you do an action, before you refi, before you sell, before you do this, you'll be in a better spot. If you come to us after you're a week out from your refi and then be like, hey, by the way, right? There's not as many, saving graces at that point.
So what kind of trends you would see like next to 12 to 24 months in the insurance landscape?
I think you're going to see some more capacity come in. I think that a lot of the carriers right now, if you're on like what do we call a layer deal, where you have like multiple carriers building up, I do think we're going to see some of those carriers that would only give a primary 5 or primary 10 taking more, which will reduce hopefully some costs. I am seeing more and more new carriers coming into the space, new programs being developed, which more programs, more space, that's going to allude to better pricing overall. It's just law of numbers. If you got 12 carriers quoting your complex compared to 3, the odds are it's going to end up better for you. Yeah, we're seeing a lot of expansion. I'll use a carrier that I love that's called Swift. They just expanded into their 3rd state, where they were just, Florida based not too long ago, but now doing Texas, doing Louisiana. And so I think you're going to see more and more of that. And every time, from that example, we keep a Rolodex of our clients where they're located. Immediately when I saw them launch in Texas, immediately when I saw them launch in Louisiana and I knew their rates, we were going back to our clients like, hey, we have this carrier for you now. So I think that's going to continue where I think it's like an investing thing of saying like, don't past events don't dictate future or whatever. I probably butchered that. I think it's the same for insurance is don't let the last 18 months dictate what you think is going to happen going forward, because there's lots of changes happening. And I think, and I'm very optimistic. My wife will tell you that I'm always the glass half full guy. So just being, truthful on that piece. But I do think there's going to be a lot more opportunities for, improvement to the insurance or just keeping insurance level, right? Like, than there has been over the last 2 years.
Yeah, cool. Thank you. Any best experience in last 12 months?
Outside of my 6-month-old being born, I think I got to start with that, or the wife will get mad if she makes it through this far of the video. But no, I've always had my brokerage for years, but we rolled off Nimble on its own 1/1. So that experience was really cool to start this new brand. Same team, same overall day-to-day work. But it's Sarah, who helped set this up, has created a really cool brand and really building something that is truly employee ran. A lot of the team, is involved in building this. So that's been really exciting. And to flip that over, it's been really exciting to see my client base, rally around that, from excited about it, compliments on the brand, to just, hey, I'm so happy for you, to ultimately trying to even bring more clients in business because they want to see us continue to succeed. And I think that says a lot about my team, realistically, not, more than me, is that people are really happy that they're getting to continue to work with the team and continue to grow and see us thrive. Because the better that we do, the better, everyone will have on the insurance side. So it's been a really cool effort. And so a lot of new stuff in really the last 6 months for me, between the kid and the new brokerage. So that's an easy question. That I have a lot of exciting things going our way right now.
Sure. Yeah. Awesome. Any challenging experiences in the last 12 months?
The exact same. Yes. The same thing. Starting the new brokerage, getting it launched while pregnant wife, new baby at home, plus a 2-year-old already in the mix. To anybody that started a brand or a new company, or however you want to, state that term, how much work is in that and that challenge. And then of course, the just day-to-day challenge of insurance is, again, I'm always going to give the glass half full and a lot of positive energy, but the space is tough, a lot of tough conversations, a lot of, people that aren't loving numbers and things not working out and deals not going through because of insurance, or deals getting hurt, due to insurance and other items. So, there's definitely been some challenges there, but I think the biggest piece with that gets us through those challenges is just knowing that we are doing the best job that we can. And if the numbers, I hate the phrase, it is what it is, but if the numbers are what they are, like, you can't control that as much. A lot of that's carrier and, other things related, but I think really just being there for your clients through that whole experience has been key, but it's definitely been a challenge.
So any new habits that are impacting you personally?
Yes, I got an electric bike, so I am now biking to work. So that is a new habit for me as a dad of young kids. Plus, I love to work. I'll use the word workaholic. Entrepreneur. Finding time for myself for a workout has been a challenge. Especially having a very client-facing type business. So got this bike that's been a good impact. It's allowed me 10 miles in the morning and 10 miles at night to get some exercise in while not having to take away from family time or take away from the business. So that's a new thing. hopefully when we chat again for the fourth time, I'll still be riding, and maybe in a medium polo compared to a large polo. You know, you never know.
So any new books that impacting your life?
No book at the moment to time, but right now most of my reading is we're building a new house, so my reading in the evenings is full of my wife, hey, read about this, or you need to look at this plan. So normally I have a book going, but at the moment I don't have one, just due to researching some other things at the moment.
So how can listeners can connect with you, Matt?
So, the easiest way that is social media, which this will probably be, posted on. I'm under my name, and there's not too many of us Sutikas out there. And I think I'm the only Matthew Sutika. So Facebook, LinkedIn, Twitter, any of the social medias, you can get to me. And then if you're wanting from an email standpoint, it's Matthew with 2 T's at Nimble, which you can see behind INS. So Igloo, Nancy, Sam.com. And then my phone number, 312-877-2692. Happy to chat there, or even text if that's easier for you.
Awesome. And thank you very much, Matt. Thank you.
Hey, thank you for having me.
Sure.